Africa is a continent open to possibility, which comes to life when those with ambition and courage find the right partner, a partner with the tenacity to stand by them and light up a continent. With the experience and unique insights to go beyond limits, Absa Group Limited is that partner. We are synonymous with stability, transparency, and innovative thinking in financial services based on the legacy of 100 years of seamless execution across Africa. Our new brand and growth strategy define how we are shaping our destiny as a proudly African bank, inspired by Africanacity. This is the distinctly African ability to always find ways to get things done. Africanacity is what drives us, what sets the tone for our business, and echoes across our African footprint. Our corporate and investment banking business challenges limits. We close distances, connecting people to opportunities across borders, languages, and cultures. With global connectivity and local differentiation, we operate at the core of your strategy. Our understanding of each unique environment across regulatory and market practices results in a differentiated service and experience for our broad range of clients. Backed by insights into key sectors, we turn risks into opportunities, supported by a unique set of solutions that work across your full value chain. Our clients experience a seamless partnership across Africa, with aligned delivery positioning you for success across operating environments. Because African ingenuity and tenacity go beyond limits, so do we. Our world-class service is based on skills and expertise that have been developed to put our clients first, proven by numerous high-profile deals and coveted international awards. We are brave, we are passionate, we are ready. We are independently African, and we believe in building courageous partnerships that work. When you have the bravery to imagine and the will to get things done, that's Africanacity. That's Absa. Corporate and Investment Banking.
Hello there, and a very good morning to you from across the globe, as many of you join us as global citizens with a keen interest in the property sector in sub-Saharan Africa. My name is Gugulethu Mfuphi, and I'm quite excited to welcome you to this morning's event, our virtual webinar, where in partnership with API and Absa, we will be discussing and interrogating the investment opportunities that exist within the continent's affordable housing sector and how best we can really unpack the opportunities that exist in this environment, specifically in a post-COVID world, and what this means for the investment opportunities in sub-Saharan Africa. Now, for many of you, you're joining us from various jurisdictions across the continent. Some of you might be in Zimbabwe, Nigeria, Kenya, Malawi, South Africa, and even as far afield as the United States. And we all gathered here as various stakeholders to really engage in some of these critical insights, to really get some understanding as to how to move forward within the affordable housing space and the investment opportunities that exist in this regard. It's well documented that the last year and even 18 months have been rocked by the global pandemic that we still remain in. But that doesn't necessarily mean that all hope is lost when it comes to investment opportunities, specifically in affordable housing. So join us as over the next hour, maybe even 90 minutes, we look to explore what the investment opportunities look like from a financier's point of view, what developers are now bringing forth to the table, and most importantly, how we continue to encourage partnerships to take place where government policies speak to finances' needs, and of course, developers continue to address the needs that ultimately change the socio-economic dynamics here across sub-Saharan Africa. Well, we're quite excited to be joined by a phenomenal panel of guests, each representing key stakeholder groups, and we'll be sharing some of their thoughts with us as we look to engage and participate in this conversation as to how each clear stakeholder can participate in shifting the narrative forward. Well, despite this being a virtual event, unfortunately, we can't necessarily interact directly, but we still want to hear your thoughts, opinions, and your questions. So over the next 60 minutes, we will be taking some of your questions through our virtual platform and, of course, allowing you to participate in poll questions that will pop up. So when you do see the poll question pop up on your screen, do respond to the questions with the best answer or your view that you'd like to share. And we will be sure to reflect on some of those responses during the conversation that will be held here this morning. Well, we trust that you're excited because we certainly are. We look to leave here enlightened, informed, and most importantly, empowered to move the narrative forward in really understanding how we can each play a critical role in shifting the narrative forward regarding the affordable housing environment as a driver for post-COVID recovery in sub-Saharan Africa. Before we get into our conversation, though, allow me to introduce our panelists who will be joining us to engage in this invigorating conversation. And I'd like to start off with the guest who joins me here in our Johannesburg studio. Sumaya Joshua, who is the head of Absa Commercial Property Finance with the Absa Regional Operations. And then joining us virtually, we do have a number of guests from across the continent. Kesia Rust, who's the Executive Director for the Center for Affordable Housing Finance in Africa. We're also joined by Rob Veselo, Managing Director for the International Housing Solutions, and Patrick Domenegos Tembwa. He's a Director for Asia and Africa Partnerships for Real. Well, ladies and gentlemen, thank you so much for joining us today, both in person and, of course, virtually. And we're really looking forward to the engagements that will take place over the next hour. But I think as we get into our conversation, we certainly cannot ignore the impact that the COVID-19 pandemic has had on the property space. It's been witnessed specifically on the commercial property space, as well as many other sectors, but has also kind of shifted the narrative when it comes to opportunities that exist in affordable housing. And Sumaya, perhaps let's start there. As we reflect on what this particular pandemic has done or impacted the affordable housing space, we certainly need to review on what life was like pre-COVID and where we are now with the current risks and opportunities that exist regarding the impact of the pandemic on the affordable housing space. How would you describe this, or what have your observations been thus far?
Thank you, Gugu. Yeah, I think it's important that we take stock of, or at least it's hard to ignore, what the challenges it was that we faced pre the COVID pandemic, especially insofar as the production of housing stock. And so I'd like to start or make that the starting point at least, So if you rewind pre-COVID, what we found was challenges across the supply side of the market as well as on the demand side. And what I mean by that is, we've experienced continentally some structural weaknesses that is a barrier to, how it is that we produce the stock on the supply side, how it is that we deal with issues insofar as costs to produce assets, costs insofar as land, availability of land, infrastructure costs, as well as construction costs. We've seen a couple of failures across the value chain over time. And I think it's important, as we kind of step up and deal with what we know to be a massive opportunity on the continent and a massively important topic from just a humanity perspective, it's important that we look at what are those weaknesses, try and apply some of the lessons learned, amplify how it is that we produce the stock. And so that talks to just some of my observations on the supply side. On the demand side, we need to understand what are the real strategies to support the offtake of product. Mm-hmm. Are there developed mortgage loan markets in our presence countries, particularly as a bank? To the extent that these markets are potentially underdeveloped, what's the answer to get the strategies insofar as offtake to work? Then I guess to get to the real problem statement or perhaps solution statement is, so what does this mean following the impact of the pandemic and what are we now starting to see? So, and the way I'd like to approach it, or at least the way I think about it, is that we know that we've had traditional or legacy issues insofar as producing stock on the continent. We know that we've gotten better in some of our markets in comparison to other markets, but what the pandemic has done is it's actually amplified the urgency insofar as producing houses at levels that are affordable and that actually tap into the masses of our population. Because from my perspective, COVID has certainly introduced a new kind of risk associated to the lack of housing on the continent. And I shape that as a health risk. So, in many of our geographies where people do not have access to decent forms of living, what we find is we've got deficiencies insofar as sanitation is concerned, insofar as access to running water is concerned. And what that does is it amplifies the risk of COVID infection. When you take that and you marry it to the fact that we do have a housing shortage on our continent, what I ask myself is, is the lack of housing going to start to manifest as a health crisis? And that's the important consideration. And for me, that really creates the burning platform for us to have this conversation about what next.
I think you mentioned a very critical point there, that we could be actually running the risk of facing a humanitarian crisis, which is something that we certainly don't need on the continent, given the multiple challenges that we continue to experience in sub-Saharan Africa. And Kessia, I'd like to come to you to respond and perhaps add your view to this question. Following the years of API conferences and summits that we've held previously, one is very well aware of how vocal you've been around the increased focus and the growth that's required within the affordable housing environment. And I guess to build up on Sumaya's thoughts regarding the demand change dynamics and how the pandemic has impacted that, what are your thoughts in terms of ensuring that we are able to use the affordable housing space as a clear catalyst for growth and prioritizing investment in this particular market?
Gugu, thank you. And thanks so much also, Sumaya, for inviting me and including me in this conversation. I think it's such an important conversation to be having. And as we're all pulling ourselves into this new world, which is hopefully now post-COVID, that we're slowly getting there. I think the points that Sumaya's made are significant. The issue around health and the conditions in which people are living has been brought into sharp focus over the course of the last year, especially because of the impact also on health. And I think from a housing perspective, obviously housing has a significant impact on household livelihoods and the way in which people are able to manage their health conditions and situations. And what we've seen is that the inadequacies that exist across the continent have to do a lot with the affordability side of households, low-income households unable to afford the cheapest newly built house, and then also the organization and structure of the housing delivery process in many countries, and the way in which the health and the strength of the developer sector. And that creates a whole lot of opportunities now for innovation because of this focus on addressing what we've learned in this COVID period, and then highlighting that housing is a key opportunity for a post-COVID economic growth strategy. So the way that we've been looking at it really is to clarify, first of all, as Sumaya said, the issue around risk. And what are the risks that households face, and how can a housing process start to address those? And that has to do with housing quality and the quality of good, affordable housing. It's also about upgrading and improvements. And I think there's an important opportunity there, certainly in settlements that are where housing quality itself is poor, but exists and people have access to a form of secure tenure, that there are intervention opportunities for home upgrading. And then the opportunity to promote housing mobility, so the construction of additional housing rental options, so that, as we've seen in the last year, as people need to improve and address their housing situations, their ability to move becomes very important, and that's part of how they would manage the risks that they would face in terms of whether it's a pandemic or any other kind of emergency that would face our cities across the continent. So thinking about that, housing quality, and then also housing mobility. Then the second area is about stimulating the recovery, and the economic impact of the COVID pandemic has been significant. And to then think about the role that housing production can play in boosting different sectors, whether it's the manufacturing sector or the housing construction sector or the infrastructure sector, that housing has a significant impact on the economy. And when governments enable that process to happen, they can see the delivery of domestic growth opportunities. And thinking about the backlogs and responding to those as an economic growth recovery strategy, as well as addressing just the backlogs that existed before the crisis, I think is an opportunity. And then the last point I would say would be about building resilience, so that if and when another emergency strikes, and it doesn't have to be a health emergency, it could be a climate emergency, cyclones such as those that Mozambique experienced recently, or fire, as often happens in informal settlements and in certain areas. There are all sorts of different kinds of emergencies that might arise, or indeed economic emergencies. How do we support household resilience with housing? And that has to do, again, with the production of quality housing that is well secured. And again, there's a reliance there on an administrative system that provides secure tenure, and linking that then into the financial system so that those units are underpinned by good finance and mortgages. And in that, I think the financial sector has an important role to play. Sumaya talked about whether or not mortgage markets exist. Well, it's banks that build those. And obviously they need to do that in the company of central banks. There's a whole policy framework that surrounds that. But banks can really play an important role in driving the growth of mortgage markets and explicitly focusing those markets on the lowest income earners, which is really the breadth of the population across the continent.
I appreciate the overview that you've given us, because it really does set the context for the conversation that we want to have over the next hour, and really driving and tapping into all these elements that come into play. And this really does help us focus into understanding, now that we are in the environment that we're in, we understand that affordable housing has a significant level of demand. We need to review how it is that we supply this, and of course the role that different parties play within this organization. I guess the starting point is then, how do we ensure that we leverage off of partnerships? Because the economic stimulus that you speak about, Kesia, does necessarily come from government and the policies that they put in place, ensuring that the financier is also comfortable with the models and the risk that they're going to take on board, that the developers themselves also realign and recalibrate the needs of the market that they're looking to serve. So I'm hoping to build up on that and come to you, Patrick, followed by Rob, to actually get your understanding and your thoughts on the increased role of partnership and transparency. And if we are at a point right now where we're seeing various parties like yourselves that are present on this webinar here today coming forward and saying, hold on, to make sure that we are able to adequately tap into the economic opportunities that exist in affordable housing in sub-Saharan Africa, this is what I need from you as a counterparty to ensure that these transactions are able to take place and that the socio-economic development that we need on the continent does transpire. Patrick, perhaps I can start off with you to get your thoughts, primarily focusing on transparency, on partnerships, how it is that we're trying to make each other's role easier for the greater benefit of the continent. Rob, feel free to come in after Patrick's opening comments.
Great, and thank you very much, Google. In our experience and in the markets where we operate, and I'll focus on Mozambique for a few minutes, what we've found is that the partnerships are absolutely fundamental for us to be delivering our program in a lot of the markets. And the difference that we've seen in a place like Mozambique is really a willingness from the local authorities, from ourselves as a funding provider, and also from the financiers, to come to a solution that actually creates a market that can be scaled and that can be repeated across the entire country in that instance. So in the case of Mozambique, the partnerships with the municipality of Beira, with Absa and ourselves in the mix was absolutely critical. And what it helped to achieve is to get to a place where the developers that we were in that particular market was able to build a certain number of units that could then be progressively bought by the market. And the beauty of that in terms of partnership is that we got to a point where Absa did originate the first mortgage in the local market. And I do appreciate that it can be perceived as insignificant, but actually it is, in the sense of you have a product targeted at low-income people, and then you have a fairly sophisticated bank which did do its due diligence, did carry out the analysis for them to be confident that actually there is a mortgage market that can be at least initiated and progressively built up, depending on how you sort of feed into the market in terms of housing units built and in terms of the models that you can create to be building housing units at scale. So to me, in summary, the critical bit is having all these different elements in place. I briefly mentioned the municipality of Beira, and what they were very exceptional on is sort of helping our developer there as far as the planning permission was concerned, as far as making sure that the wider social infrastructure that can make a house appealing to the wider market be available for our developer to carry out their activity. In short, this is a critical element of how you are wanting to work in each one of those markets, be it Mozambique or Nigeria, and getting it to a place where not only it is scalable, but also it's attractive to the wider ecosystem. And what Absa, for instance, has done in Mozambique, how about it being replicated in places like Kenya and Nigeria and elsewhere, because then you have a benchmark that can be used to tweak even further in relation to each individual market.
Sounds like fantastic news and moves that you're making on the ground. Rob, go ahead. We don't want to mute you at all.
Yeah, I would certainly agree with everything that's been said, and yeah, great to be here, and thanks Sumaya for the invitation. In our experience, one of the key issues about getting affordable housing going in all these different markets is scale. And to do something at scale, it's got to be well supported by financial partners more than anything. And financial partners are only going to support a well-designed product and a well-implemented process. So the sharing of all of that information along the value chain, whether it's design, particularly in the current green environment, we no longer build any affordable housing unit in any country that isn't EDGE accredited and certified, which means that it's green. We really rolled out the IFC EDGE program in South Africa together with the IFC and shared all of the information that we had, and the IFC shared all of the information that they had. And what you now find in the market is that just about every house that's getting built is being accredited as green and is therefore making significant savings. Because they're green, you get more institutional support, and the equity that's required to roll housing programs out en masse on the continent is probably the biggest issue that we have with accelerating this mass delivery. Typically, it starts in the private equity space, like we have done with many funds in South Africa, Namibia, Botswana, and now Kenya. But I think one of the key changes that we're going to see in a post-COVID environment is, with this concept having proved itself through some generous DFI allocations over the years, we hope to see some more typical institutions coming into the space and investing equity for return. And in order to give those institutional investors the returns that they need, we have to share information and share best practice and share worst practice as well. So where mistakes have been made, we've got to make sure we don't do them again. And I think that's going to happen. Certainly from our point of view, we like working with partners. We like doing repeat business with banks. We like to work together to find the best way of doing things. Price point is everything in this market, and that means that needs a collaboration. It needs a serious collaboration to get to that price point.
Rob, I think you've directed us to the right person. Sumaya, right next to me, right? You mentioned the financing is needed, and we do need to ensure that that is rolled out adequately. And Sumaya, I'm actually hoping to pose a two-edged question to you in terms of following up on the growth and the benefits that we saw being deployed in Mozambique, mentioned by Patrick, as to what that success was like and how you adapted the need to create debt financing for that particular market. And then also building up on the element that Rob also posed regarding making sure that new property developments that do come on board are actually EDGE accredited. And I do understand that this speaks to Absa having recently launched a green bond green home loan in 2020, which actually saw some significant success. So let's perhaps pick up on those two themes, the success in Mozambique, and then speak to us about the green home loan and just exactly how we see that being deployed in future developments and if there is a key growth driver behind that.
Sure. I really would like to answer your Mozambique question on a more broader basis.
Sure.
Because, as a bank, we've had successes in various geographies insofar as how it is that we're thinking about housing. And of course, as a significant lender in all of our presence countries, we continue to focus on responsible lending. And maybe part of the success has been the recipe that we apply in how we think about funding into these developments. And I would like to just share a broad outline of what that looks like. And that recipe to me is so simple. It should be so simple, at least, that you should be able to replicate it across various geographies on our continent. So insofar as accessing the debt is concerned, I think that the starting point is, and Rob highlighted this, is the starting point is the sector definitely needs patient capital. We need the equity to come to market, and we need the investor base to be patient insofar as how it is that they extract value, given the equity that they've put into certain developments. And so our starting point is always about, we know that as a bank, we are very excited about affordable housing. We've had successes in some geographies. We've been better at it in the likes of the example that Patrick might have mentioned and other geographies, including South Africa. We now need to replicate that. And what do I mean by that? As a debt funder, fundamentally, we think about a couple of considerations insofar as what the right debt opportunity is. And it's always on merit. It's always case by case. But if you'd allow me just to give you, the framework.
Sure.
We try to make the way we think about funding as unsophisticated as possible. It's really about, the client strategies and the client's experience in our sector, the market that our clients are operating in. Is there demand for the product that we're bringing to market? And to the extent that there is demand, what is the level of effective demand? And how do we actually go about testing that effective demand through a host of risk mitigators, including pre-sales, including, how we marry an end user's desire to own a home to the end user's ability to access the capital to actually purchase the home. So we get back to, in the markets that we operate in, where is the mortgage loan market? And to the extent that there potentially is one, what does the funding structure look like? And does it depend on a client's ability to produce some equity into a structure? And if it does, where does that equity come from?
Yes.
And so in this sector, what we find quite challenging is that it's typically going to be first-time buyers, people that have not had existing property, where they've managed to have the luxury of a little bit of soft equity coming into their structures. One's not sure of the secondary market to kind of understand how you then unlock that equity. And so how easy is it for willing buyers to actually access funding to provide the takeoff that we consider? And that's critical for us. In any project, what is the exit strategy? And is it believable given market nuances that we see? And then finally, it's about the fundamentals, right? Do you have the right product? Is the price right? What's the competition? How quickly are we moving develop at least individual product? And what's the optimal debt structure? And that's where, the happy marriage comes together. When you've got credible client, Rob mentioned, clients like to do repeat business with banks.
Yes.
And in the same way, banks also like to do repeat business with clients because we then understand, the modus that we operate in, and we've built a level of trust. And once we understand project metrics, we also understand how it is that we mitigate whatever risks we see in the structure. So fundamentally, it then lands up being product, price, market, and debt structure. Debt structure is really just taking a perspective on loan-to-value ratios and comparable sale values potentially when you're selling, or it becomes a play on, again, gearing ratios and interest or debt service cover ratios in a structure. But that's really the simplified stuff. It's the nuggets in the front. It's the market that you're operating in that gets us to a point where we're successful.
Makes sense, because you can only replicate so much in different markets and jurisdictions, because at the end of the day, the end client or the service that's being met is different depending on the market that you're on. I do want us to segue that into the question regarding the green home bond that was launched in 2020. Very interesting year to launch such a product. And I guess the big question then is, how did this perform? How is it done? And does this perhaps present a new tool or method for us to move forward within the affordable housing space?
Okay, so we are very proud of having launched the first home loan green product in South Africa. So I must just state that it was a South African launch. And yes, it was done in 2020. And of course, in the middle of various lockdown approaches in South Africa, particularly. So we, sustainable funding is a big priority, across the globe. And as a corporate citizen, we remain focused on finding ways to continuously fund projects in a way that gets us to contribute to reducing the carbon emission footprint, especially in our presence countries, and, to do good from an environmental perspective. This bond was lodged, or at least launched, in the middle of a global pandemic. And so whilst the traction was a little bit slower than you would anticipate in an ordinary operating environment, we've seen a couple of key successes come out of that initiative. The first is, in spite of the fact that lockdown measures did slow down economic activity, we have managed so far to approve about 9 million rands worth of home loans to qualifying end users in this qualifying product. And we've managed to do that at reduced rates. So again, just what it does is it makes the product more affordable, and it makes access to home ownership a little bit more realistic. The other thing that's important, that's hard to ignore, is that all of this is about collaboration. And in the home loan green bond, we actually, as a bank, collaborated with one of our clients, a very prominent developer in the sector, to launch this bond. We are partnering in learning the lessons together and in applying funding into these developments that we know in collaboration with the client. But what it's done for us is it's created a level of synergy for banks, for private developers, clients, and as well as with the South African Green Building Society. And so the real takeout is, how do you now take those synergies that you've created and launch it to do more insofar as sustainable lending is concerned? And then I guess lastly, 9 million doesn't sound like a big number, but the real opportunity is that, and this unfortunately is the South African context, the real opportunity is that we are cited on about, more than 600 developments in South Africa that does have the EDGE certification. And so we are not limiting ourselves insofar as this bond is concerned. we think that this bond is available in even that established market to now buyers in the secondary market for so long as we can see that the product qualifies from an edge perspective. And then lastly, how do we then make this work on the continent?
Yes.
I think the short answer is that what we've managed to demonstrate is the capability to raise the bond, right? And the capability to then deploy that capital. What we now need is the scale to start being introduced in new markets. We need the stock to be developed. We need investors that have got a keen interest in wanting to apply capital, invest capital in sustainable or green qualified developments. It's hard to ignore the costs associated to that certification. I think it's equally hard, though, to ignore the overall cost saving in the long run. And
just on that, you mentioned a very important point, because there is a question that has come through in one of the chat from one of our viewers here on the webinar, who actually asked, are there good incentives to incorporate IFC Edge certification into affordable housing projects? What are some examples of where these incentives have aligned? So you mentioned the incentives. We do need to measure this out at scale. Your response to that particular question before we throw it out to one of your colleagues on the panel?
I know that Rob's also quite a specialist in
Yes.
this. So how I'm going to answer that question is from a funding perspective.
Sure.
So the real benefit that you get, in my mind, is on the end user level, because what we're now trying to do is pass back the benefit of a lower interest rate onto a homeowner that makes the product affordable. And then on the supply side, and even in South Africa, there have been examples outside of this bond issuance where developers have managed to tap into reduced funding on the development program insofar as lending rates is concerned. And that's important because it creates that leg of affordability from both the build side of the sector as well as the buy side. It's how do you pass savings across? And then how do you, and perhaps Rob will answer this as well,
Sure.
how do you create long-term efficiencies in operating either your home that you own, or some developers would run rental stock, and what's the long-term efficiencies that they get as a result of reduced operating costs? And that's an overtime benefit that you manage to achieve.
Indeed. Rob, let's get your perspective here. A reminder of the question is, are there good incentives to incorporate IFC Edge certification into affordable housing projects? What are some examples of where the incentives have aligned? And maybe we can build up on this and some of the themes that Sumaya has mentioned before expanding this further to perhaps look at some examples across the continent that have proved to be quite favorable. But Rob, your response?
So maybe what I can start with is saying that we have done comparisons between developments that were built pre the Edge world. In other words, they weren't Edge certified and we didn't follow the Edge program. Same area, same developer, similar number of units, to a scheme that was post-Edge, so where it's Edge accredited, Edge certified. Quite important to make the point that there is really not any significant cost differential. So it doesn't have to cost you money to get a property Edge accredited. There's a very, very small difference in price. And we've worked on that over the last 4 or 5 years and managed to identify interventions that don't necessarily cost a lot of money. It's simple stuff. You go to a high-end house and it'll have a dual flush toilet, whereas they could probably afford to use more water than an affordable house, which won't have a dual flush toilet. Something as simple as a low flow tap, a low flow shower head. Those aren't costly interventions, but we've done the comparison, and we monitor this on a monthly basis. And we find that our tenants tend to save about 1 month's rent in a year on electricity and water, just through the property being Edge certified and Edge accredited and designed efficiently. And that, for someone in the affordable space, that's a big number. So if you want benefit, that's benefit straight up. You're getting a cost benefit from a utility point of view, and we know utilities are just continuing to go up. We are starting to see the early stages of tenants who have become aware of the fact that an Edge certified building is cheaper to live in from a utility cost point of view, starting to have a preference. So we'd like to advertise that our buildings are EDGE certified and accredited. I do think that over time, from a resale point of view, this will become a factor. We know it's a factor in the non-residential space. It's going to take a long time, but this is rolled out really way quicker than I think anybody ever imagined. If you'd said the word EDGE 4 years ago on this webinar, no one would have known what you were talking about. And I don't think there's a residential developer in South Africa at the moment, if I'm honest, that doesn't know what EDGE is. And certainly we're now working in Namibia, Botswana, and Kenya, and it's there. And nothing that we build is not going to be EDGE accredited. So I think this is definitely going to be beneficial. We're definitely going to be coming back to Samaya and repricing our development bonds. And so I think it's very positive. It's the green angle makes it more investable. And to Samaya's point, the institutional equity investment is what we actually really need in this market to be able to deliver mass delivery.
Indeed. Well, we're looking forward to there being flies on the walls when those negotiations and conversations take place between yourself and Sumaya. But on that note, though, it is quite clear that financing has certainly come up as a very key element that we need to focus on. And we have run a poll, which many of you have responded to. Our question to you was, what financing solutions can improve affordable housing development? The large majority of you, 62%, saying innovative end-user mortgages for low-income households. That's quickly followed by 20% voting for green bonds and ESG financing solutions, which will facilitate greater development in future, and also followed by mezzanine financing to bridge the funding gap for developers. 4% actually saying not feasible. Governments should fund housing developments through different instruments, i.e. bonds. So I think it's quite clear where we are. We're looking at innovative solutions, which have been alluded to in terms of mortgages that speak to the markets that we're working within, green bonds and ESG financing solutions, and of course, mezzanine financing coming up as a third option, a lot lower down the list. And this makes me want to get your thoughts here, Patrick, as well as Kessia. Perhaps we can build up on the theme that we're discussing here in terms of ensuring that there is enough debt financing coming onto the market, including equity. Are there further examples that you can allude to on the continent where these kind of partnerships have been explored? KSD, I understand, is one particular example, but how we actually see particular examples and nuances coming up in maybe markets like Kenya, which I understand have actually seen resounding success. Patrick, go ahead, and Kessia will follow up with you.
Sure, and I think when we discuss financing, what I'll insist on is the key element is actually having a sufficient amount of financing flowing into that particular sector. We can figure out different type of mechanism, and I'll touch on that on those shortly. But I think what's lacking fundamentally in the affordable housing is the fact that there isn't enough funds, financing flowing into that particular sector. So when it comes to mechanism, the example that I'll take is probably what we have done in Nigeria, where we work with a particular partner to develop a number of housing programs. And the way we intervened there was providing that sort of patient concessionary funding, and which came in the form of debt at a fairly low interest rate compared to commercial rates that are applied in Nigeria, but also some grant finance acquire a particular technical skill or to fund a particular study that will help market their product even better. So in terms of sort of blending finance, that's the model that we've been working a lot with our partners in the African continent, accepting that because it is a sector that doesn't have enough operator, because it is a sector that's the large organization that can build at significant scale haven't yet jumped in, so to speak. The key element is what kind of patient concessionary funding can you come up with to support that, to help them to move into that sector. And we recently signed a financing agreement with a Kenya-based large developer, and this really speaks to that, how we sort of decided that because they are entering a market where there are not enough of them to build at large scale, we are comfortable to be providing that patient capital that get them not just to deliver the housing units, but also to kind of see the value of the work that they're doing and see the potential market over time. So that's one key element that I wanted to mention here.
Before we go to Kessie, I do want to jump in there and actually ask you about this flow of capital. One would assume that given the dynamics that we witness in the commercial property space, that everyone would be running towards affordable housing. Is that not the case, or a bad assumption on my part?
Well, I think the key element at the moment is the sort of perception that exists around affordable housing. So affordable housing for low-income people, affordable housing for people in the informal sector. So there's not necessarily the kind of appeal that you will see for more of the middle and upper income segment that are out there. So that's why the flow of financing is not necessarily as available as you would expect for such a potentially large market. And then the final side to that, and I have to say here that Absa is not in that space, is the fact that it's a challenge for people on low income and informal sector, working in informal economy, to secure mortgages. And again, Absa actually it's something that can happen in the Mozambique context, and all these elements sort of can contribute to a development of a market, as I said, which is absolutely critical, because in a lot of the developing countries, you're talking about 60 to 65% of the work population being in the informal sector. So how do you bring those into the formal space, and how do you put in place financial instruments that get them to be attractive, not just to the cooperative sectors, but to the likes of Absa banks and the wider sector of commercial banks as well. That's one of the key elements that we have been trying to push.
Fantastic. Kessie, I'm hoping you can respond to some of those burning issues and adding your own thoughts to the conversation as well. How do we increase the attractiveness of capital to the affordable housing sector?
You know, I actually think that capital is hugely curious. I think so many investors, certainly on the DFI side, but also impact investors, and then also just the wider investment sector, that absolutely can see that there should be opportunity in affordable housing across the continent. Now, that definition of affordable housing is wide. And there are the very, very low income, and that sort of appears mostly in the news. And then there are working class people, from security guards and nurses and teachers and so on, and then entry-level workers within the corporate sector and so on. So there's quite a lot of diversity in that market. And I do feel that the wide investment sector is curious and interested. Where there's a struggle is the ability to place the money into investable projects. And that has to do with, again, the diversity of the investors. So the initiative that IHS is doing within Kenya is really interesting, because IHS has long experience in Southern Africa in building a fund that's targeted a particular segment of the working class market and delivering affordable housing in that segment and getting to know the developers really well, and the regulatory and administrative environment in which they're operating really well. And that know-how that they've built, now they want to apply also in Kenya. And I have no doubt that they'll be able to support and grow that market significantly, and through their effort, demonstrate that this is a viable undertaking. You have to be strategic and focused. And what we need more so than, one of the most significant things we need, and it's something that Rob mentioned right at the beginning of this conversation, is we need information and data. So the anxiety of any investor when they engage in an investment is, well, what are the parameters of this investment, and what kind of a return and what kind of performance can I expect? And out of that is this question of risk, and it's an intangible in the affordable market because there's been very little data available. And so what's quite exciting is now, and we're doing this, CAF is doing this with IHS and with Real and with FSD African Investments that has invested into the IHS Kenya Green Fund, is we've set up an effort to collect the data from the delivery and the development effort real time, looking at the structure of the project that is being developed and the experience of its implementation over the course of the development, the people that it's targeting, and then over time also the performance of that effort, to produce and to share that information and data broadly so that all investors can become more familiar with the character and the nuance of the market, so that they can better feel what the risk is and engage in that. And that is an effort that, I mean, we're starting it in Kenya and establishing an affordable housing investment alliance in Kenya in order to support that. But it actually, I think, is something that every single practitioner should be doing, sharing as much of the data of their own experience as possible into the public domain in a way that is, commercially supportable, but doing that because while that shares information, it reduces risk levels because it creates a certainty about, or a familiarity with, what the market looks like. And that will start to bring in more investors as they can begin to feel what the opportunity is and get an assessment of the kind of risks they can take as they experiment and play in this market. And that's the point that Rob was making. From DFIs now moving into more sort of investors that are looking for a direct financial return and who want to see this, packaging their investments in ways that actually engage with the breadth of the lower income market. That's the kind of work that we're trying to do. And I think that every practitioner in this space should be participating in this way because it will broaden the pie, because we'll have more investors coming in. I want to make one other point, Gugu, if I can, just quickly, in response to that poll that you did. And the majority of people who said that we need mortgages that target low-income clients and that know how to work with low-income clients. I think that's a really important thing to consider. Again, it's a data question, because in order to extend a mortgage to somebody who doesn't have a traditional kind of employment, so maybe they're seasonally employed or they work informally, they don't have a pay slip, but they've got a bank account statement, we're going to have to change the way in which we underwrite our products and structure them and so on. And that means that we need to be better able to collect data also on the demand side. And this is something that we're working quite hard with Real as well is to really understand that and start to clarify who are the clients, what is the target market in this market segment, so that lenders can then structure their products and underwrite safely and developmentally, but for informal incomes, and to recognize that the target market that is earning a good income, the way that income is structured is perhaps unfamiliar to the vanilla mortgage product. But that's a market development exercise and should be fairly easily addressed with some careful looking at who the target market is and some creative product development effort.
You mentioned a very valid point there, Cassie, and I appreciate it because it really does build up and speak to another theme in a separate poll that we've run regarding the importance of technology. The role of technology, is it key to achieving scale in the affordable housing environment? And 90% of our participants do say yes. And maybe I can, if I may, get your thoughts in terms of technology, how we're seeing not only banks, developers and others in terms of sharing the data and sharing this information. Are we seeing greater incorporation of technology to make it easy, accessible, and of course in terms of distilling the key information that we need to extract to meet the needs of the market?
For sure. I mean, I think technology, there's so much more we can do now than like 10 years ago. 5 years ago even. And the key thing about technology, it operates as a mechanism both for aggregating the opportunity. So technological innovations that can then recognize all of the small interventions that are being made, whether it's savings through savings groups or small developers who would then be providing, who would be building maybe 10 units at a time, and technology to begin to aggregate that opportunity and share it with an investment class that's looking to invest big capital and having to figure out how to structure that capital into smaller pieces. One of the things that we've been looking at quite a lot in South Africa with colleagues, 71.4 and SSA, is to build blockchain technology that supports case management around titling and tenure. And that's been a very interesting exercise where we can use technology to capture beneficiary information that normally is actually stored in cabinets and under mattresses, and build up a credit profile and a tenure profile of a household so that they become visible administratively to a developer, to a lender, and to a city. And I think blockchain technology itself is, I mean, it's quite a sexy term, but there are really interesting opportunities there with managing the pieces of information and collecting them in a place that then an investor can see and engage with.
Quite exciting. You wanted to mention something else there, Kessia. However, I do want us to sidestep slightly to some of the questions that we have received from many of our participants. There's a lot of engagement and we really thank you for it. And I do want to venture into some of the themes that many of you have highlighted and brought forward. As Kessia has mentioned, we really do need to make sure that we speak to the needs that are addressed in the respective markets that we serve. And I recall just over a few years ago at the APA Summit where Kenya has been a key market that we focused on, and we've had speakers share the view in terms of how government has aligned this to their 2030 policy of increasing the affordability and access to affordable housing in that particular country. We know that many financiers continue to operate there. Some of you might be watching from that particular jurisdiction, and what we understand is that there has been significant uptake. There is a question that we have here that is addressed to our panel, and I'm hoping, Rob, that you'll be able to provide us with some perspective here, given the recent developments that have taken place for IHS. We've just recently closed a deal in Kenya. This question asks specifically, affordable housing in Kenya has been quite a focus issue, with even the government incorporating it in its agenda. But the level with which it's progressing is very disappointing. Some policies have been put in place to support affordable housing, but the progress is still disheartening. My question is from the developer's point of view. What more needs to be done? Rob, I'm hoping that you can share your experience in terms of the recent deal that you've closed in Kenya and perhaps build up on the pros and cons and the lessons that have been learned in operating in that particular market. Rob?
So thanks, Gugu. I must just point out that we are as much as we've been exploring the Kenyan market and understanding it for the last 3 years, we only are beginning to operate in Kenya right now, literally as of a couple of weeks ago. And I think the missing link, and it's quite right, delivery has been slow, and it's the case over most of the continent, unfortunately. Going back to a lot of the points that have been made up to now, I think that lack of end-user finance is a big problem. Lack of equity for developers to invest in scale products is a problem. Our private equity fund hopes to start resolving some of those problems. So we are a large investor. We are going to invest in large developments that could be either for rental or for sale. So I think rental plays a big part in the market here. There are a lot of people who can't afford to buy a house, or maybe don't want to buy a house, maybe have a home somewhere else but need a home in Nairobi. So the rental market, I think a large percentage of Kenyans rent their homes, and a lot of them are informal homes where they're paying quite significant rental. So I think the equity check, and we've spoken about that a lot, is what has sort of been the blockage in the system at the moment. So we are certainly working with a lot of Kenyan developers now, putting some transactions together where we are able to provide that equity. And I think once the equity has been provided, that gives the rest of the chain security, whether it's the landowner that's selling the land, whether it's the bank that's coming in and doing finance. So I think that's been the missing link. I think that's the reason why there hasn't been large-scale affordable housing delivery. These governments typically don't have big pockets to build the housing. South Africa is a country where a lot of RDP and breaking new ground housing has been provided. We also do in South Africa have the SHA, where social housing capital grants are paid, and I think this is something that can perhaps be looked at in other geographies. It's a very successful program, and it targets a more affordable market, so where people earn below a certain amount of money, the government actually provides a capital grant to the developer, who can then develop quality rental housing with a ceiling on the rental that they can charge. And this is very popular in South Africa. I think it can be explored in other countries, so where it's a sort of a real collaboration between the developer, an equity partner like ourselves, a bank, and then really servicing a lower tier of user. But that kind of capital grant is essential in getting something like that to work.
Thanks for that, Rob.
Yeah.
Go ahead. There was one more line that you were going to conclude with.
I'm saying, and I just want to differentiate that from what we would typically call an affordable housing market, where we're able to put in enough equity as an owner to allow affordable rentals, or we're able to put in enough equity as a developer to allow the takeoff. But I think from a takeoff point of view, we have to also consider products other than typical mortgage lending, particularly in countries where interest rates are very, very high, makes it unaffordable. So installment sale type transactions are going to have to happen, and they are happening on a small scale. But we certainly are investigating in a couple of the markets that we're operating in, providing a product that is perhaps more usable in a very high interest rate environment.
Thanks for that perspective, Rob. Maybe let's come to you, as the mayor, to also build up on a question and a theme that Rob has mentioned, and a question that has come through in terms of making access to mortgages more affordable, specifically when it comes to markets that do have higher interest rates. The question asks, is Absa willing to take this up, ensuring that banks are willing to offer loans to consumers in markets where interest rates might be significantly higher and perhaps the environment is not as mature as what you've experienced in your other jurisdictions?
Sure. So I think, the point is so right that part of what stops the sector from actually gaining momentum is the gap in so far as the end user home loan market is concerned. And maybe the way that we are trying to address the problem statement in collaboration with some of our key operators in country is to perhaps talk about the role that we're playing in a country like Kenya, where Absa as a bank has been appointed as part of a ministerial committee where we're working alongside the government of Kenya, given that they've been intentional, signaling that they would like to introduce 500,000 affordable units, but they just haven't managed to get it right. So what we are trying to do is now work alongside them to start to really fully influence mortgage markets across different banks. And I think the cost of funding is less of a priority for us right now than to get the infrastructure right, than to get access to the data that Kessia talks about. Because as a bank, we know how to produce mortgage loan products. We also know how to price that in a way that, makes commercial sense. What we struggle with to a degree in some of our presence markets is the availability of data so that we are able to make keen and clean credit decisions on who it is that we can extend mortgage loans to. And when we have that information, we believe that as a bank, we will continue to support developing the home loan market out, and we will continue to understand how to price and how to raise the right kind of capital to make this market start to flow. And
Here's an interesting trick question that's come in for you, also from one of our participants who actually asked, can you finance bulk purchases like a block or multi-family unit? And I think that does speak to one of the nuances, it's specifically in some of the markets that we know are present across the continent, where family savings, bulk savings, in South Africa, we'd refer to them as stokvels, might prove to be popular means of raising capital for groups of individuals who would like to purchase a property. So tough question, top of mind, but would you ever consider bulk purchases or financing them, multi-family units per se?
So we've got a lot of experience in funding. You know, you're calling it bulk purchases. I'll call it funding into rental models, right? So you might have a structure developed where you have a couple of people participating and they might be buying a host of units in the same development with the intention of renting those units out. The way I would answer the question is to say that we do have the ability to lend into rental portfolios where we look to see, you know, does the income stream afford the repayment of a loan? Does the economics make sense there? And insofar as, you know, who it is that we fund, and I know you're talking about, you know, kind of stokvel arrangements, and I'll carefully respond to that by saying that, you know, everything that we do is on merit. Everything that we do is case by case. And to the extent that we are doing a level of lend that might be not traditional, what we need is to be armed with the facts, and we can assess, we take views, you know, predominantly we take sector views, we take client views, and we take views on market. And to bring that answer back to data is, I'm not going to say we don't. I'm going to say that where the business case stacks up, we can get our head around putting some gearing into established rental stock. What we need is the data to evidence the business case. And that's you know, something that we really need to prioritize to stop talking from an aspirational perspective, you know, and to start evidencing what we can do, given that, you know, we have the depth of experience already.
Data coming up as another key point, and as you say, speaking to the nuances. So if people are using different forms of saving and investment in various products, then those are the elements we need to be mindful of. Patrick, I do want to bring you into this part of the conversation, as there has been another question that has come through from one of our audience members, and it's a dual question addressed to both yourself and Rob. The question asks, what is IHS doing in terms of there we go. What is IHS and Real looking at as their strategy to support one or two large developers or drive scale or more mid-sized developers to achieve some scale? So I guess the question is this way. Are we looking to support two developers who will drive the scale and predominance on the continent, or support a number of small developers who will then help us achieve some scale? Patrick, perhaps you can enlighten us as to how Real approaches that. Rob, I see you eager. Feel free to jump in as soon as Patrick's done.
Absolutely happy to do that, and my apologies, my Wi-Fi gave up on me a few minutes ago. So the way I respond to that is that our intervention is focused on a couple of markets, and in each one of those markets, our absolute priority is to make sure that we've got a kind of varied set of partners to deliver on our work. So the larger scale developer, to us, they are absolutely critical, because that gives us the opportunity to prove that although they are fairly large, they can operate in a market that has been unattractive so far, but is actually worthwhile because they can have the volume and they can also generate the right margins for them to continue developing as an organization. As far as the sort of mid-range developers are concerned, the attractiveness from our perspective is effectively to be seeing that journey from a structure that can build, say, 300 or 500 units in the first year, moving into your thousands. And our intervention in that sort of setup is to make sure that we provide the right type of incentives, not just financial, but also on the technical bit, because we've got a good team of built environment specialists here in the UK and also on the ground, and also linking them up with others in the sector, be it the financiers, be it government entities, so that they get to a point where they become strong in the market and can play with the much wider sector. And I have to say that as an organization, our ambition is not to dominate any markets. And on the contrary, it's just to prove that value of the affordable housing sector, not just on the kind of health and educational element of it, but as a fundamental sector that influences the microeconomy in terms of job creation, in terms of financial services. And one example that I'll draw on, and apologies, it's not in the African continent, is one of our partners is in Nepal, actually did manage to provide a cash guarantee for its customers so that the local bank could provide funding for them for home improvements. And what has happened over time is that they've turned out to be the best customers for that particular bank, not just because they had a 100% repayment on the loans, but also because they could sell to them financial services, other types of loans. And the original start was a home loan, mortgages for them to get into that journey of being viewed as customers that provide a lot more to the wider economy.
Rob?
I mean, I concur with all of that. So we certainly don't plan on using one or even two developers. The way that we've always worked is we like developing developers. So if we can be in Kenya in 10 years' time and be working closely with 20 different developers, we'd be very happy. And if we could have grown some of those developers from small-scale developers into large-scale developers and even competitors, we've done that in many other markets. Then we're impact investors, so that would have been a success. Kesha spoke earlier about the platform that is going to allow us to share information. We already do that on a sort of less formal scale in South Africa and Namibia in particular, where we share our designs. We've spent many years perfecting what we think is a very efficient, green, effective design, and we give that to our partners. We work with them. We obviously, as you move from geography to geography, some things need to change, but there definitely are a lot of lessons that can be utilized. So that's our strategy. We always say that's where we're a little bit different to a bank. In our investment committee paper, where it says the developer has not much experience, we see that as a positive and an opportunity to actually grow that developer. It might mean that they need a little bit more partnering and a little bit more hand-holding and maybe a watching brief here or there. But we're really proud of some of our examples of developers that have really been quite small-scale developers when they've started working with us and actually now competing with us on equal footing.
Talk about grooming the competition, huh? You've really done that in an interesting manner. There's an interesting poll that we've also run, and I guess it does speak to the questions regarding how the dynamics of affordable housing have changed on the continent on the back of the pandemic. And the question that we asked was, has the pandemic pushed affordable housing from the periphery to the center of discussions, and why? We've had interesting outcomes. 47% saying it's too early to tell where the market is going and growing, as there might be new players entering the market. And 31% say yes, the pandemic has shown the need for housing in order to self-isolate and stay safe. And Rob and Kessia, perhaps this is a question best directed to you both in terms of understanding how, from an end user perspective, the needs, the design, the structure, and the technology that's implemented in affordable housing no longer just needs to provide the basics of 4 walls and a restroom, but maybe even looking at the way that we are interacting and connecting right now, looking at Wi-Fi, looking at environmental sensitivities and sustainability in the long term. Rob, are these new elements that play a different role in how you're designing some of your properties going forward? And Kessia, are these needs that we need to prioritize in future, perhaps both from a government policy point of view and, of course, from a structural and design from developers? Rob, let's get your thoughts.
Yeah, so absolutely. For us, like anything we build now must have Wi-Fi. It's not an optional like it was years ago. We are building for a lot of young people, and young people don't operate without Wi-Fi. It's as simple as that. So it was happening pre-COVID, but I think COVID sort of accentuated the need for it. It's just we are now looking to house people who are living in informal environments, a lot of them. So to be able to pull them out of that environment and allow them to have this kind of access, because who knows what the next pandemic is. But I think what we all agree on is that there will be one.
Indeed. Kezia?
Yeah, I mean, I think that perhaps what the pandemic highlighted, and it's a point Sumaya made right at the beginning, is it was a magnifying glass. It shone focus onto a range of issues that existed even before the pandemic, and that is that housing needs to respond to the evolving needs of households, and those change over the life cycle of the household itself, and then of course over generations as well. What I think is so interesting, and maybe we see it again more now than we did before, is that the ecosystem for affordable housing is beginning to fill out. So 10 years ago, you could sort of count on your hand how many people were engaging in the sector. And increasingly, we have more developers, more diverse array of developers, more investors and lenders and financiers coming in. Government, certainly in Kenya, it's a priority. It's been a priority in South Africa for quite a while. It's a priority in Rwanda and Uganda. And there are very many governments that are explicitly articulating it. And that's demonstrating for the private sector that there's an opportunity to start engaging. We've got almost a progression of support from Real, which works with particular developers who are working in a particular part of the housing income pyramid, and also possibly, I'd say, with very young developers who need additional support. Then the kind of work that IHS is doing, as they say, they want to grow developers. So they're happy to receive a developer that is solid in intention, but maybe doesn't have the years of track record that a bank might want. And if you create that chain of finance so that developers and other practitioners can graduate from one finance to the other, and then you can have the DFIs to smooth that progression and provide some of the risk underpin, I'm seeing that happening. A key point, of course, is that we need to know that each other exists. And then that creates the basis for building the collaboration between all the parties. So if we, in this space, understanding the demand side, understanding how the supply side fits together, and now starting to formalize the way in which we share that information, I think that's key. And I think the future now, an invitation to all the new investors, I think there are real opportunities in this sector, because you do have a number of key organizations who've sort of paid the school fees and made this a place where it now can attract much more attention and much more engagement.
Point there, Kezia. We do have one more question that's come up that I'd like for us to address and perhaps share your views in terms of the new dynamics and opportunities that do exist here. And this is one that speaks to circular buildings and not necessarily focusing on traditional real estate, which we know is not movable and attached to the ground. Circular buildings can be relocated and rest on top of land, so can be viewed as a product instead of land or property that can be repossessed. So the questions asks, is there any focus into new financial models regarding circular buildings? Kezia, maybe Sumaya, you can also add your thoughts on this one.
Circular buildings in particular, I'd love to hear what Sumaya thinks, because I haven't heard about a finance instrument specifically targeted at that. But I do think it's worth just noting quickly the difference between a shelter solution and a property solution. And certainly a shelter solution is a really important part of the process. And having something that's movable is useful for a particular segment of the target market. What it doesn't do, I think, is build the property market that then becomes the kind of self-sustaining engine that delivers to the breadth of population, that leverages the activity that's happening in the middle and the higher ends for addressing and developing more affordable opportunities for lower income people as well. I think there is something about property markets as being greater than just housing that is important to consider as well in the financing approach. But yeah, I'd love to hear what Samaya says about financing.
Fantastic. Rob, your hand has been noted, so we will come to you as well. Samaya?
So look, I do think that this is about, we have to be flexible on the offering, right? Let's be honest. But my immediate reaction is that, where you're looking at potentially movable asset classes that provide shelter, to Keisha's point, that to me looks a little bit different than taking a property perspective on a transaction. And so I feel like the real answer to that is you're going to need the equity to prove the story. From a banking perspective, we are always going to look to what is the quality of our security, and is that security fixed asset? And that's predominantly, the market that we play in as debt funders. That's certainly not to say that, we do need to think about this on a more bigger picture basis insofar as how we solution just the accommodation gap. And so I'm not saying that there isn't a place for movable structures, but I would say think about how you then access the capital to get that right, and what it is that you can put together from a banking perspective if your desire or your funding structure happens to include a little bit of debt.
Fantastic. Rob, you also have some feedback?
Yeah, so I just want to, as an aside, there is actually quite a big drive going on in the South African market, and it's mostly in the backyard shack environment. So where homeowners have backyard shacks, this is a slightly more formal product that might improve the living conditions of the person living in the backyard shack, but also improves the income of the homeowner, which could be a sort of win-win for everybody. So I think the opportunity is that it's perhaps not financed as a home loan, and it's perhaps not seen as property finance, but it's seen as an installment sale. And it's a real win-win. So I do know of a couple of local funds that are starting to look very seriously at this product, and I find it quite interesting, actually.
We certainly will be following up on that to evaluate how it does unfold and is adopted and accepted by the market. To close off with, there's another question that we have from the audience, and I guess really speaks to, again, addressing the needs regarding the different models of financing. And the question asks, are there models that exist that involve employers to schemes such that financing for end users starts at the pay slip? Perhaps, Samaya, you can respond to that. Patrick, you're also quite keen to take that one. Go ahead, Patrick, and maybe give us your views, incorporating employers in funding models, given that the assessment of affordability for end users starts at their pay slips.
Sure, and it's actually a very good point, because that's one of the latest development and quite exciting from our perspective, that we've had in Kenya, where we are working on 300 housing units for security guards and of a particular organization, and this is being developed through a kind of tenant purchase scheme, and it's a very attractive model, not just because of the fact that it's underwritten by an employer, but also because the employer has thought of the sort of wider structure in terms of making sure that these employees have their mortgages available, and also making sure that the agreement there protect employees in the strongest possible manner in the case of when they leave the organization or decide not to follow through the entire program. So it's very much something that we have started investing in. Feel is particularly important because just add an extra layer to the affordable housing space, and how you can have a proposal that actually caters to all the different sides of the value chain, and which is something that has been missing in a number of markets that we have been working in.
some that we certainly hope can be deployed across many other regions in sub-Saharan Africa. Well, we've certainly engaged in quite a few elements, and I think what we've really managed to gather is that the capital is there. The capital is moving towards affordable housing. However, it is a need for us to ensure that we do reevaluate the various kind of models and structures that are incorporated to ensure that we adequately meet the needs of the local markets that we want to address. Whilst there are generic themes that are easily deployed across various nations, but it does go back to understanding the needs of the end user and, of course, the environment of the companies and countries that we actually look to build in. It certainly is a changing dynamic in terms of how developers are coming on board and ensuring that they speak to the environmental practices that are required and, of course, still addressing the new age needs of citizens who remain globally competitive but yet want to be locally relevant within the markets that they operate in. And I think given that we've set this theme in terms of data sharing, increased collaboration, making sure that we open up the environment for all participants to increase the pie, I do want us to step away now with closing remarks from each of you, 1 minute each, just to assist us in taking this conversation forward. I guess well over 2 years ago, no one would have thought of the pandemic and the impact that it would have had on the affordable housing space in sub-Saharan Africa. But here we are, 2 years later, having significantly identified and participated in opportunities that exist, but we do need to make sure that we shift the needle further in ensuring that we adequately meet the demands and the shortage of supply within these particular communities. I'd like us to close off with going through each of our panelists to share their closing remarks as to, now that we've identified that opportunities do exist in the affordable housing space on sub-Saharan Africa, how is it that we need to move forward? That not only will this participate in the COVID recovery plan of affordable housing property in the continent, but that we realize true growth from this in the next 2 and maybe even 5 years ahead. So, Maya, I'll take the liberty of starting off with you as you're in studio and then work our way through Kessia, Rob, and Patrick.
Thanks, Gugu. I think that, there's no doubt that we're not hearing anything new today. The housing crisis is what it is. There's a deep level of demand. I think that if we can just go back to the basics and appreciate that, or perhaps use this burning platform to really start to lobby for momentum in the sector. And what I mean by that is, there's a role for governments to play. I'm not convinced that the role is to even put capital behind the progress. Perhaps, and Kessia said it so well on a call the other day, I think the starting point is if we can lean on our governments to really clear the way, for private developers to fully participate and to participate in a way under perhaps easier operating conditions. I think if we can deal the bottlenecks, if we can, understand where we went potentially wrong and what the lessons have been learned, I think that the capital is important. It's so refreshing to know that, we now have the private equity funds like IHS coming in to participate in markets. The market needs capital. It needs patient capital. So if we tick that box and we can then deal with, so now what's the answer for municipal inefficiencies and how do we solve for that? I think we've got the recipe. It'll be great for the stock to now start to come and for the data to come together, because if this crisis has taught us anything, it's that, and for those of us that have operated in the residential sector for a long time, we've always said that in spite of everything, people always need a place to live. And this story is at the heart of that. Residential has proven to be a defensive subsector of the property market, and it therefore makes sense commercially for investors and developers, for banks, for governments, and for good. So I'm very passionate to see where this continuous conversation takes us, and I'm passionate to see how it is that we can participate as a bank on the funding structure for our clients.
So quite literally, home is where the heart is and where the capital is being directed. Kessia, your closing remarks?
Yeah, that's so nice to hear, Samaya. It's very exciting to hear when a large commercial bank is very keen on engaging in this segment of the market and sees that it makes sense commercially, that it also makes sense in terms of just what is the world that we want to live in. I think that the way in which we do start to crowd in participants, bring them in, whether it is the private sector investors or government, and to convince each party to play the role they have, they need a sense of optimism that it's possible, that their efforts will be put to good use. And for that, the data sharing issue is really important. And it's not just data. That's an easy word, and that looks like a spreadsheet. It's the experiences. It is the track record. It's the good stories. It's also the bad stories. We want to be able to intervene when there is a blockage, as that blockage happens, and intervene with evidence. So then we can motivate the municipal authority or the other players that are in that particular segment of the value chain to put their efforts into clearing that blockage. And these are things that we can do because each one of us on this panel, and certainly across the audience, we have different capacities. And we play different roles in the process. So I would really like to encourage everybody in the call and also those in the audience to please come and join us and to join the Africa Housing Investment Alliance. We're very keen to work with the data that is produced in the sector and to share it into the public domain in ways that are useful and that are developmental. And we'd be very to engage with any one of you. Samaya, I'll come and talk to you about Absa, and I hope that you'll be able to join with IHS and with Real in Kenya and the Affordable Housing Investment Alliance there. But broadly, this is a really great opportunity. And we're very keen to do our part, certainly, to share that information so that the road is smoother and so that everybody can fit on it. Thank you.
Thanks, Kessia. Rob?
Yeah, look, I think what's clear is that we have an opportunity as a subsector of the real estate market. It's never been a better time to be a residential developer or a residential investor, in my view. And Kesha's right, there's a lot of new players coming into the market. The reason they're coming into the market is because we're quite honestly the only game in town. You can't develop offices, you can't develop shopping centers. The world has changed. So you're seeing a lot of new people coming into the industry, and you will see investment follow that. And we're starting to see it, but it will take time. And the one thing we've all got to guard against, which is why we all need to be prepared to work together and share best practices, is massive failures. We can't afford them, because as quickly as money comes in, it runs away where there's a perception of risk. And we are in an industry where there has been a massive perception of risk. When IHS started building institutional size rental properties 10, 11 years ago, it was almost impossible to get senior debt, bank funding on a term basis, because there was a perception of risk. That's now changed. It's actually because we've proved ourselves operationally. Banks will be comfortable to provide, a good slug of senior debt into all of those schemes. But it was a proof of concept. We have to keep that concept working. We need to prove that we can not only build them but manage them. The management is an exceptionally big part of the business. So I think we must be prepared to help each other, work with each other, so that we don't have failures that send the investors running in the opposite direction.
Fantastic. Thank you so much, Rob. Patrick, you have the last word.
Yes, and I will echo that. And I think the key point from my perspective is really to have that sort of two-pronged approach, which is on the one hand what we call in our organization the build side, which is all about actually construction, putting money on the ground so that there's a track record that is developed. There's data and evidence that can be used to push the narrative further. So that's the element. And then the second element is more around the broker. So what do you do and how do you use that track record? How do you use that data and evidence to make sure that over time there is actually a developing and thriving sector that comes into play? And to me, the beauty of that second element is the fact that you are really moving into a space where you're transforming a market, you're transforming lives, and also you are having an impact. There is that absolutely compelling element of through housing, creating an intergenerational asset that people can use build on wealth over the years. And really, it's that journey and using that two-pronged perspective around the build side and also the broker, bringing the financial sector, bringing government officials and others who are keen on expanding the market. That will be my final message.
Indeed. Thank you so much to each of you for sharing such poignant insights with us throughout the last hour and a half, really getting to grasp the opportunities that exist in the affordable housing space in sub-Saharan Africa, and most importantly, highlighting the fact that this is where the growth is. We shop from home, we learn from home, we work from home. Primarily, not only is home a place of great productivity for many Africans across the continent, but also a place of safety and shelter that also meets the socio-economic needs that we have, and probably addresses one of the best questions that we had on the poll this morning, which is, what are the most important economic benefits to affordable housing? Well, a large majority of you said create social cohesion needed in the economic dynamism that we want to express. So as we walk away from today's conversation, I trust that you are left more enlightened in understanding the opportunities that exist, introducing more capital, enhancing on the collaborative efforts that we have, and of course, accessing and making use of appropriate data and technology. This is certainly going to be how best we shift the needle forward in the post-COVID recovery of the affordable housing space. Thank you so much to my guests and our panelists for joining us here today and giving us some of their insight. And of course, to you participating in the Q&A and the polls that we've had, and for engaging with us here on this platform. Until next time, we trust that you keep safe and of course, continue to be a key player in the affordable housing investment narrative here on the continent.
Africa is a continent open to possibility, which comes to life when those with ambition and courage find the right partner, a partner with the tenacity to stand by them and light up a continent. With the experience and unique insights to go beyond limits, Absa Group Limited is that partner. We are synonymous with stability, transparency, and innovative thinking in financial services, based on a legacy of 100 years of seamless execution across Africa. Our new brand and growth strategy define how we are shaping our destiny as a proudly African bank, inspired by Africanacity. This is the distinctly African ability to always find ways to get things done. Africanacity is what drives us, what sets the tone for our business, and echoes across our African footprint. Our corporate and investment banking business challenges limits. We close distances, connecting people to opportunities across borders, languages, and cultures. With global connectivity and local differentiation, we operate at the core of your strategy. Our understanding of each unique environment across regulatory and market practices results in a differentiated service and experience for our broad range of clients. Backed by insights into key sectors, we turn risks into opportunities, supported by a unique set of solutions that work across your full value chain. Our clients experience a seamless partnership across Africa, with aligned delivery positioning you for success across operating environments. Because African ingenuity and tenacity go beyond limits, so do we. Our world-class service is based on skills and expertise that have been developed to put our clients first, proven by numerous high-profile deals and coveted international awards. We are brave, we are passionate, we are ready. We are independently African, and we believe in building courageous partnerships that work. When you have the bravery to imagine and the will to get things done, that's Africanacity. That's Absa. Corporate and Investment Banking.